A recent Redfin report showed that 56,000 escrows fell out in the month of June. That's the highest amount of any cancellations of any June on record. Fear is sure gripping the buyers across the country with all those cancellations. What's causing the wave of cancellations, and could you be next? Look, let's dig into the report and find out.
I'm Kiwi of the coast, the agent with the most.
So what we're seeing is a huge affordability issue. Buyers are really having trouble qualifying for those high mortgages and also paying those high prices. And the buyers, of course, are reacting by getting more and more selective. They're backing out of deals over the minor issues, a fix it here or the seller's unwillingness to do something, and they feel like they're starting to get control back and say, you know what, if you don't play ball with us, we're out. So the report is telling us that the mean home sales price rose 4% year over year to a record $442,525 in June, and the average interest rate on a 30-year mortgage was 6.92%. Now, while that's down from 7.06 in the prior month, it's still double the interest rates that we saw during the pandemic. In some areas, the situation is even more dire, like Orlando, Jacksonville, and Tampa, where they saw cancellation rates as high as 20%, just showing that those buyers are really resistant to more pressure in pricing and interest rates. Now, according to realtors in the area, we're seeing some really nightmare situations where buyers are pulling out right at the last minute, and some of them are not afraid to leave their deposits behind. They're shocked to see on these new purchases what the hefty costs are, like insurance, which has really shot up. That's property insurance. Property taxes, of course, based on the valuation, the new valuation of their sale. And of course, another big one is HOA dues, which have certainly increased over the last couple of years. And that's in addition to the cost of their already high mortgage payment. Experts say this trend is likely to continue if we don't see some improvements in affordability. Buyers, of course, they're waiting on the sidelines, hoping that they'll see either more inventory and a little bit of price settling, and hoping that the Fed drops those rates in September, which will affect the mortgage rates and the payment that they're having to pay. Although the reduction in the mortgage rates that we're seeing right now, they're already building in the anticipation of the Fed lowering in September. Now, another key point that was brought up in this article is the amount and quantity of price reductions that we're starting to see for the first time. The report is telling us that roughly 1 in 5, that's 19.8% of homes for sale in June, had a price cut, the highest level of any June on record, and that's up from 14.4% a year earlier. It's just shy of the 21.7% record high set in October 2022. Sellers, of course, have been reducing their asking prices because their homes have started to sit on the market longer. And those sellers that are lucky enough to get offers, they're often looking at offers that are below their asking price. They're negotiating those deals so that even with multiple offers, those homes are closing less than asking. So what the report is telling us is that the typical home that sold in June spent 32 days on the market, the longest of any June since 2020. That's up 3 days from a year earlier, and it's the biggest increase in over a year. So what the report is telling us is that listings are piling up as a result. Active listings, or the total number of homes for sale, were little change from a month earlier, but jumped 12.8% from a year earlier, the largest annual gain on record. Now, of course, submarkets can be different. We're looking at an overall pattern here, and along the coast in the Newport Beach area, things are still pretty tight, but the overall trend with homes staying on the market longer hopefully will translate to us soon. So how are home sales being impacted? Well, let's see what the report says. US home sales posted the biggest monthly decline since October. Home sales fell 0.5% month over month in June on a seasonally adjusted basis. While they may seem like a small decline, it's the biggest since October 2023. Home sales dropped 1.1% from a year earlier and were 21.5% below pre-pandemic, i.e. June 2019 levels. Sales, frankly, are sluggish because the buyers out there are tired of pushing themselves to pay those higher prices, and frankly, they just can't afford it any longer. Something is going to break, something is going to happen, and we're already starting to see homes stay on the market longer, price reductions in certain marketplaces, and sales that are coming off those record highs and closing below asking. But are those buyers waiting in vain? Is there some relief in sight? Is this announcement of the Fed potentially lowering rates in September really going to change the dynamics of the marketplace that much? These buyers may be waiting in vain. Let's see what happens in September. The real estate market is constantly changing. Click on the video that's on your screen right now so that I can keep you up to date with changes in inventory, mortgage rates, and all those factors affecting you and the real estate market. See you on the next video. Vroom.